from Punjab National Bank to HSBC and now leading strategy at Hong Leon Islamic Bank. He has driven multi-billion dollar financial initiatives, pioneered cutting-edge payment solutions across South Asia and Asia, and played a key role in major regulatory reforms like India's payment data localization project. Welcome to FaceTime with Leaders, a podcast by Directors Institute World Council of Directors. I'm Charu Mehra, and today we have the privilege of speaking with a leader who has spent over 26 years transforming the financial industry, not just by driving innovation, but by reshaping how banking, compliance, and strategy intersect in a rapidly evolving world. Rajesh Geetakrishnan's career is a masterclass in banking innovation, digital transformation, and financial strategy. From Punjab National Bank to HSBC and now leading strategy at Hong Leon Islamic Bank, he has driven multi-billion dollar financial initiatives, pioneered cutting-edge payment solutions across South Asia and Asia, and played a key role in major regulatory reforms like India's payment data localization project. But beyond numbers, his work is about impact, building sustainable, inclusive, and future ready financial solutions. As a leader in digital banking, compliance, and product innovation, he continues to push boundaries, ensuring that financial institutions don't just keep up with the change, but stay ahead of it. Rajesh, it's an absolute pleasure to have you with us on FaceTime with Leaders. Welcome to the show.
Thanks a lot, Charu. Thanks not just for having me out here for the session, but also for the embarrassing introduction that you provided. I hope to make justice by making the session fruitful for the audience out here.
I'm
So let's go
absolutely
for it.
looking forward to this incredible conversation we're going to have today.
Same here.
Great. So, Rajesh, a career like yours, which is marked by roles at global banks, groundbreaking financial strategies, and spearheading digital transformation, this doesn't happen by chance. It is built through experiences, challenges, and pivotal moments that shape the leader that you become. Looking back, was there a definite defining moment or unexpected opportunity that set you on this path? Did you always envision a career in banking and innovation, or you were looking for something else, and this just happened?
So I would say it was a mixed bag. I'm quite sure it would be the case for most of the professionals who typically have a long career.
I'm sure.
Start to think you're a fossil now. But the way things evolve over a period of time, it's a mixed bag in terms of having opportunities that land on your doorstep, as well as a case
Right.
of you planning your career forward. Banking was purely by accident. I passed out of uni and landed a banking job. Didn't even know what banking was back then, apart from just about money exchanges.
Right.
But after initial few years of drift, I landed a job with HSBC, which was a career-defining moment for sure.
Hmm.
And I got a job into product development, which is what I
Okay.
cherish. I've been part of product development for almost about 15, 16 years now,
Wow.
across geographies. That change, that transition into product development made a huge difference. It's not just
Hmm.
about the career transition itself. It's about the
Right.
attitude that you typically develop when you become a product development guy. You're looking at
Absolutely.
perfection. You're looking at making sure there is a right outcome being given for customers at the end of the day. You start looking at
Right.
customers completely
Right.
differently when you get into that side of
Right.
the world. You're looking at making sure you get the outcome right, so which is why the risk management element kind of kicks in immediately.
Hmm.
You start looking at value creation coming through. That's
Right.
something that stayed with me for a while. Up until now, I cherish that. You look at how exactly you're able to contribute to the people across within the
Right.
system or outside.
Right.
And from a career transition standpoint, I would say I took a little detour from how typically professionals would look at. And I was in cash management, just to kind of
Okay.
the
Okay.
audience. I was into cash management. I took a leadership role in a developing market like Vietnam. Now,
Mm-hmm.
back then, years back, it wasn't considered the best choice. But
Mhm.
I simply loved the time that I spent in Vietnam. It was a developing
Right.
market, lot of technology changes happening out there, and to be
Right.
able to lead a team, to be able to lead people, that kind of made a huge difference.
Mhm.
From there, I switched on to a relatively developed market like Malaysia, and I had a regional oversight of as far as the other markets are concerned.
Right.
Now, what stands out as far as this journey is concerned is not just in terms of being able to uh, create value for people out there, create value in
Mhm.
the financial system, but it's also about being able to assimilate with the culture out there, with the people out there.
Right.
And remember,
Right.
Asia is it's a continent, but at the end of the day, it's a mixed bag as far as culture is concerned. Vietnam
Absolutely.
works completely differently. Malaysia works completely differently. To be able to get into one culture, adjust, create value, build a brand, and then to switch to another market and
Uh,
again kind of repeat the same
right.
exercise, that's
Right.
something to do with not being in a comfort zone, which is what I kind of enjoyed. Keeping
Right.
the principles in mind, which is, hey, create value wherever you go, and you're able to kind of get that value going. That
Right.
allowed me to help build a network over a length of time,
Mhm. Mhm.
network internationally, and
Mhm.
that had a huge impact in terms of the roles that I uh, managed to kind of land over the
Right.
last half a decade or so. So that's something that really stayed with me. Is this the best way I would want to take it forward? I would still believe that principle holds good for me. I guess what 15, 16 years I was with HSBC before I decided I need to kind
Mhm.
of go into a different environment. And the
Mhm.
role that I picked up with Conventional Islamic was again with the same mindset. I'm going into
Right.
a world where I'm going to catch up on Islamic banking, which is a completely different uh, franchise, completely different model of banking altogether. It's more about socially viable banking. I got into
Right.
that particular space and I kept the same principles in mind, which is creating value for the audience, or they're creating value for the customers. They stayed with me up until now. Looking forward to another few years of corporate leadership. I hope that that happens, but I'm going to hold on to that principle, which is what has worked for me.
I'm sure it'll work for you, and it's really incredible hearing about your journey, and it's always fascinating to hear how careers evolve, like not just through strategy and planning, but also through unexpected opportunities that come across, and you're agile enough to grab those opportunities and
Right
turn
on.
them around. So yeah, that's
Right
really
on.
been great. So, Rajesh, we know that banking has always been built on trust, stability, and strong fundamentals. But in today's digital first world, the industry is evolving at a pace like never before, and it demands agility, innovation, and bold thinking. So, having led strategy in both legacy financial institutions and cutting edge digital banking environments, how do you strike the right balance between preserving the core banking principles and driving rapid innovations?
Good question. What's core banking at the end of the day? It's about moving money, like lending, taking deposits, being able to provide the best services. But
Right.
we're not switching away from that kind of a mindset. We're still
True.
holding on to that.
True.
Now, where banking stands at the end of the day, all of the industries in and around us is already kind of seeing a significant amount of innovation, technology
Right.
transition that's happening. You
Right.
name it, it's happening in the consumer sector, it's happening in the real estate, it's happening in electronics and all the other sectors. As a matter of fact, now financial services is sitting right at the center. It's the core
Right.
to it. You
Right.
can't escape. You can't move in the opposite trajectory now.
True.
Now, at the end of the day, all of these services are being provided to consumers. These are
Right.
consumers who are getting access to services a lot better, a lot
Mm-hmm.
faster, a lot more secure. Let's just take
Mm-hmm.
one example: um, smartphones. Your life
Right.
literally kind of depends on the kind of phone that
Depends
you're
on.
holding on to right now. Everything
Absolutely.
is in the palm of your hand now. The
Absolutely.
consumer's expectation is for financial services also to be made available in the palm
Right.
of the hand. Now,
Right.
when we try and innovate, we are not moving away from the core. We are still holding on to the concept that we got to get the best value for customers, the best
Right.
service for customers. Now,
Right.
with that aspect in mind, you start innovating. In the banking world, typically when you're looking at technology, there is a sizable capex challenge that typically most banks go through. Let's just take the example of a consumer typically having access to all the services, all the products that he needs in the palm of their hand. Let's just look at how financial services are to be offered. It's got to be the
Right.
same. It's got to be the same
Right.
consumer experience as a matter of fact.
Right.
Now, within the banking world, typically the capex associated with launching new technologies is significantly high. Not every
Right.
bank is money on the table to launch the technology. So what's
Right.
naturally happening is you look at alternatives. If you can't build, you look at buy. Uh, if I were to be an honest banker, I'd say not all of the technology changes have been led by the banking. There are fintechs, there are NBFIs who have
Right.
typically kind of done a fair amount of technology change innovation in this particular space.
Right.
Historically, we used to look at them as competition, but we've
Mm-hmm.
realized that that's not going to be the answer. If you want to
True.
evolve, if you want to be able to give the best value for customers, either look to buy or you look to collaborate,
Right.
which is what has happened. And there is logic, there is merit in why some of these fintechs are able to provide the best answer. Look, the way they operate is pick up a small problem statement, try and give a technology outcome to it, and you move on in life. You won't be
Right.
able to do that in the banking world. You're looking at a
True.
very clunky system more often than not when it
Mm-hmm.
comes to take a strategic decision on whether or not to invest money on a technology or whether
Right.
we naturally look at alternatives, one of which is basically to look at partner with these
Mm-hmm.
fintechs, partner with these technology providers, and try and give the
Right.
answer to the customer. In doing
Right.
so, one way in which you basically bring a bit of value addition is to make sure it is secure, make sure it
Mm-hmm.
is compliant,
True.
make sure it is basically syncing to
Right.
the core objectives, the principles that banking is all about. So that's
Right.
that's the way innovation is also being brought about by us. And
Right.
if I may sum it up, I come from the product development side. The way we
Right.
used to develop products is significantly evolved. Historically, we used to look at launching a product and taking it to the customer and say, here is a
Right.
product, please take it and you kind of move on in life. Now, the way
Right.
product development typically happens is it's more of a co-creation model. You're looking at talking to the customer as you evolve, as you build a product. You're
Right.
making sure that the product is syncing with the expectations of the customer.
Right.
Herein
Right.
lies the ability to make sure that your principles are not lost, principles are not eroded. So
Right.
that model of developing a product has also evolved over time. So you're able to get that balance going. Is it
True.
perfect? No, it will evolve. It will continue to evolve. You get to learn, and
Right.
which is where legislations in place, the regulators typically make sure
Right.
that your product development methodology is also syncing with what the consumers are wanting to have. So I'd
Right.
say this
Right.
is the way to typically kind of stay connected and make sure that you're getting the balance right.
Wow, wow. That's such a powerful perspective, Rajesh. And balancing innovation with trust isn't easy. Like as you said, the core value remains the same. And your experience really highlights how banks can modernize without losing their core identity, as we just talked about it. So, Rajesh, in today's economic climate, it's so unpredictable. We have market volatility, interest rate shifts, and geopolitical uncertainties that constantly reshape financial landscapes, which makes effective cash management very critical. And with your deep expertise in cash management solutions, can you suggest something that, how can banks design strategies that ensure financial stability, optimize liquidity, and still maintain agility to respond to sudden market shifts?
What's cash management at the end of the day? It's offering financial services and products to
Right,
customers to be able to receive money, pay money, or hold on to money at
right,
value, right?
right,
That core principle hasn't changed. It still holds good.
right,
But what's
right,
evolved over time is also connected to the way we do product development, something that I kind of touched upon a few minutes back.
earlier, right,
Historically, the way we used to do cash management is offer a certain set of products and services. We offer it physically or through net banking services. And,
hmm,
and the typical competition between banks used to be around pricing or around the service quality. That's it.
right,
That's history.
right, right,
Moving on, what's happening now is that you're slowly realizing that cash management also needs to be curated based on the sector, based on the industry, based
right,
on customer maturity as well. Like, for example,
right,
you have an SME customer who probably prefers things to be offered completely differently to a conglomerate.
right,
SME
right,
customer typically wants basic set of cash management services, easy access, less cost,
right.
and to be able to kind of grow. So you need cash management in order to be
Cash,
able to grow as an organization.
true,
Conglomerates are ones who prefer integrated services. They are absolutely fine to have clunky systems connected to their operating systems. They want
right,
how do we call it? predictive analysis, they want treasury reports, they want to be able to have data. So that the ability to identify your customer and to be able to curate is what is becoming more apparent, more
Right.
necessary.
Right.
I, unfortunately, if I may say so, I've been part of that transition when we used to offer traditional cash management to now being able to curate and create propositions based on the customer segment.
Customer.
That transition needs to happen more often than not. You
Often.
can't offer the same set of products to an SME. You can't offer the
True.
same set of products to
True.
comrade. You've got to be able to distinguish. The other
Right.
element here is also the kind of role that a fintech is today able to kind of provide. Fintechs today are able to offer bank in a box service. What is bank in a box? You typically kind of offer all of that what a customer typically wants uh, at a single contact point, and that could be digital, that could be physical. It doesn't matter. So
Right. Right.
that's something that is absolutely relevant for an SME customer today. We banks have not necessarily kind of addressed that particular space. An SME is the fulcrum of growth. Let's just accept it.
Right.
Be market
Right.
like India or Malaysia or Vietnam, where I've been part of, I hear the same story. SME is the way forward. We haven't
Right.
necessarily given that kind of an outcome for an SME customer. So that's something to be focused upon to be able to curate, create value based on the kind of
Based on
segment.
the custom. Hmm.
The other element, as I said, is partnering with fintechs. Today, my immediate competitor is not, if I were to be in a foreign bank, which I was till a year or so back, my immediate competitor in the past used to be some other foreign bank. I wouldn't want to name them. But now I look at a fintech as a competitor and as a partner. If a fintech
Right.
can offer a better cash management product, I've got to look at them to be able to learn and to be able to
Right.
either partner or create something better. And it's
Right.
for the buy and build model. It's the same thing. If I can't create, I've got to be able to buy and extend that to my set of customers. Having
Right.
that mindset, by the way, there is a lot of commercial benefit to it. You don't have to really put a lot of money on the table. You
Fun.
could look at a very smart partnership coming
True.
through and you create that
True.
value. White labeling is another way of basically offering technology to customers. As long as you're having that wide spectrum of options to be able to extend technology to customers, you are in the right space, and cash management is evolving in that space. Uh, uh, one other area, movement I mentioned spectrum, I kind of realized one other area where there is a lot of movement happening is AI, is big data.
True.
Now, let's just take an example. I was speaking to a payment partner who mentioned that they have been processing some 8 trillion transactions across geographies. Now, imagine 8 trillion transactions is a huge amount of data, which is sitting
Right.
on some server unattended. It's just
Right.
data after processing. But today, the way banks are looking at cash management is can I convert that data into a business opportunity
Hmm.
for the bank, but
Right.
also be able to convert that data as consumable data for the corporates for whom they are
Right.
thinking. So that's where the use of AI, the use of automation tools typically kind of kick in. I could relate to something that happened with my organization HSB about a couple of years back. We created a working group that looked at how exactly this could be translated. One is having an
Right.
idea about being able to create big data and pass it on to customers. Two is the
True.
execution part. So we actually
Ah.
kind of work with the front line and with the pilot set of customers to see whether this could actually be materialized. And
Ah.
believe me, the outcomes were amazing. It's just
Wow.
about making this happen more often, and you will actually
Right.
see transition happening. One
Right.
last point, if I may say so, on market movement and the ability to do cash management. Let's just take UPI as an example. The way
Mm-hmm.
UPI operates today is basically changed cash management big time. Now,
True.
there is huge impact on liquidity for the bank. There is huge impact on liquidity for customers. You have got the payment partners like a Razorpay or their equivalent who are offering similar services
Right.
through their
Right.
wallets. Impact to float is huge for these small businesses, as a matter of fact. Can you
Right.
address them by ensuring that you're offering similar technology outcomes for customers?
Ah. True.
UPI much, I'm just using UPI as an example. Can I offer UPI in a much better way such that the float is not necessarily challenged? Relevant
Right.
market like India, where the countervailing interest regulation makes it important to convert float into money. So that's the way to basically ensure that you remain relevant with the market.
Wow, wow. That's such a relevant perspective, Rajesh. And in today's financial landscape, where things are changing so rapidly, liquidity management isn't just about compliance, and it's about staying ahead of the risk and unlocking new opportunities. And the way you said that collaborating with fintechs and identifying and offering solutions based on the kind of customer you have, so that would really make a difference. So, Rajesh, compliance and risk management continue to be the backbone of financial stability. And you've led major initiatives like India's payment data localization project, Malaysia's Do It Now, which must have required navigating both compliance, risk management, and technology development at an entity and industry level. So, in your experience, what is the key to building an environment that fosters a balance between compliance and innovation?
Loaded question. You know, in a financial system is very integrated. Integrated in
Right.
most developing markets also, not just in a developed
Hmm.
market. The the element of risk not being addressed early can translate into
Right.
a significant amount of loss, and it could be any kind of loss, as a matter of fact,
Right. Right.
not just for the institution in question, but it could be a risk for customers and for the industry as a whole. Now,
Right.
which is precisely the reason why when you look at how exactly you mitigate risk in a financial system, you look at
Hmm.
governance, you look at how exactly your systems are basically able to stay relevant in today's world. You look at
Right.
process controls, which is largely people driven or system driven.
Right. Right.
All, all of these elements are already there in most of the markets. In a market like India, the maturity is relatively high. But yet, you've seen enough instances of banks failing, uh,
Right.
NBFIs failing from time to time,
True.
and a
True.
lot of the issues related to why they failed is actually kind of picked up much later. It's a
Hmm.
de facto reaction to what exactly has gone wrong. So if we,
Right.
while the controls are in place, while the governance is in place, it still needs to be refined in order to ensure the fail systems are in place to make sure that it doesn't happen again. That's
Right.
one
Right.
aspect of what exactly you need to do on the governance side. Let's just look into the other side of innovation, which we picked
Right.
up earlier. It's the speed of innovation is never seen before,
True.
and with innovation coming in, the quantum and the quality of risk is also kind of going up. So it's a two-way
Right.
street. One is leading to the
Right.
other. Let's just
Right.
take technology to begin with. Now, introduction of a new system. Let's just take Do It Now or a UPI equivalent that we launched in Malaysia. You're launching
Right.
a new payment system. The risk associated with a bank defaulting or a money not necessarily getting paid to a customer or money getting lost in transit, customer
Right.
grieving, all of those risk elements are newly brought into picture. You got to make
True.
sure you're able to address it. How do you address it? Typically, you're making sure the systems are foolproof. You're making sure the
Right.
process controls have got least amount of human interaction.
Right.
You're making sure that the paperwork is basically kind of taken care. When I say paperwork, digital or otherwise, you're
Otherwise.
making sure the governance is not just limited to the first line of defense. When I say first line of defense, it's not just the business. It's the
Right.
towards who are the second line of defense. It's your auditors who are the third line of defense who come in to make sure that the newly introduced technologies are functioning smoothly and you're not necessarily opening doors to a new risk. So
Right. Right.
technology translating into a new set of items. One area where I believe the balance can be achieved even better is to bring in the board, the 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 non-executive team into the picture much earlier and ensure the information is seamlessly flowing at regular intervals, rather than waiting for something to go for a loss. I had this experience, if I may say so, back in Malaysia. We've been processing. Uh, is in Islamic banking, the way it works is every transaction, financial transaction, typically has to be backed by a Sharia contract. Now,
Okay.
the way it used to work is it was all people driven, and there were systems in place to make sure it goes through. Necessary controls were in place, processes were
Right.
there, regular
Right.
audits were happening. Yet, we came across a scenario where certain transactions were not necessarily executed in the best way possible.
Mm-hmm.
If I look at it, it's because the governance was not necessarily foolproof, in that we were
Right.
not necessarily keeping the board informed at all times. My
Right.
systems were not necessarily refreshed. My
Mm-hmm.
processes, although they were going through the regular checks and balances, were not necessarily eliminating the risk that typically was supposed to come through. Which means
True.
I need to keep refreshing my processes. I need to keep
Right.
refreshing the way I am basically launching new technology or new partnership. So that's one way of looking at how exactly I do technology innovation. The other element out there is the product development piece where I make sure that right from day one, I keep governance, I keep risk management
Checks.
as a primary responsibility
Right,
than
right,
as a reactive element to a launch of a new product. Uh,
right.
and it's good to say that in most markets, product development has typically kind of evolved. We do
Mm-hmm.
take into account regulations. We do take into account feedback from the regulators before we actually launch
Right.
the product. We do take into account customer feedback also to make sure that those risks are not an outcome later, but they are addressed early on before we actually
Earlier.
launch the product. So the
True.
overall concept of how we launch a product has also kind of evolved. So
Right.
that's why I said it's a two-way street. You look at risk and you try and make sure you're innovating in the best way possible. Process controls going wrong.
Right.
I'll give you a very amazing example. Frontline typically looks to launch products or looks to extend products to customers or bring in new
Right.
customers. Now, all
Right.
of those screening or transaction monitoring is used to be done by humans, where there is
Mm-hmm.
an obvious conflict of interest, which is to gain new business. So
Right.
naturally, your processes are likely to take a hit. How do you eliminate that? You try and bring technology in to make sure the process is automated.
Right.
Eliminate human touch, you're able to get the desired outcome. So it's about one taking care of the other, and you're
Mm-hmm.
able to get that balance going right. It's been happening reasonably well. And in a way, I would say banks are to some extent benefiting uh, from the from the experiments being conducted by fintechs, which we as an
Right.
organization may not be able to do, but typically financial institutions like bank have been able to learn from the experience of
Mm-hmm.
the. So that's largely been the story for the last, if I may say, a decade and a half
Mm-hmm.
to answer your question.
Wow, wow, that was really insightful, Rajesh. And the intersection of regulation and innovation is such a fine balance. And hearing about the experiences that you navigated, through via complex initiatives like data localization, and it really highlights the importance of collaboration between policymakers and financial institutions. Like we
Yes.
just you just talked about it, like taking the necessary permissions in advance, consulting with the customers in advance, acting proactively rather than reactively. So yeah, that really plays an important role.
Bang on about that particular project that you're actually mentioning. It's a perfect example of how exactly you eliminate a risk with technology, but you don't do
Right.
it onto yourself. If I may share, it's a very regulated project. There are certain restrictions around what can be shared. But if I may
Right.
just share the crux of how it was approached, it was
Mm-hmm.
not a project executed by one function. It was a bank-wide
Okay.
project. It
Mm-hmm.
was done not just by the risk stewards, but it had the necessary participation from the business and the tech folks. Uh,
Right.
the way it was addressed was you kept one aspect in mind, which is can I get the necessary regulatory outcome? But while doing so, what's the impact to my customers? The moment you keep
Right.
that mindset open to say, I should not translate any regulatory projects into a major challenge or major problem statement for my customers, you're able to get that.
Customers.
You're talking
Mm-hmm.
millions of dollars being spent in just making sure you're on the right side of the law. But in
Right.
so if you're compromising on the customer experience, you're then losing the plot.
True.
That's the
True.
way to basically make sure you're getting all boxes ticked.
All boxes ticked. Yeah, yeah. So, Rajesh, you've spent over 2 decades shaping the future of banking, driving financial innovations, regulatory transformation, and strategic leadership across global markets. With such a wealth of experience, what is next for you? Do you see yourself taking on boardroom roles where your expertise in risk, compliance, and digital transformation can shape the governance at the highest level? What's next for you?
You could have had this question without you reminding me about having spent 2 decades in banking. We'll probably catch up on that later. To your specific question on why I'm here and where do I plan to go about?
Where do you plan
You're
to go?
right. Largely, the last 2.5 years have been about operating banking services for the benefit of customers. Typically, we
Right.
client. I've had leadership roles across geographies, lots to learn, and that learning curve doesn't end.
Absolutely.
Am I absolutely clued on about everything that's happening in the banking world? Frankly, no. It's still a learning curve for me.
Yeah.
The advantage of having been on the product side allows for me to be able to kind of come up with new technology, new propositions. I've had
Right.
the blessed to have had the opportunity to launch about 25 products or propositions over the last 10, 15 odd years. So what
Wow.
that allows is it's allowed me to engage with the customers. Typically, people look
Hmm.
at product development as a back-end role. No longer the case.
Right.
Actually, in front
Right.
of the customer more often than not. You're in front of the regulators more often than not. You're in front of external stakeholders like fintechs or some of the other industry participants more often than not. That engagement was extremely fruitful. There's a lot of knowledge that I've been fortunate enough to accumulate. What
Right.
I look at now is, can I take it to the next level? And it's
Hmm.
also about my original principle, which is to come out of the comfort zone. I've been doing this for a length of time. Is
Right.
there a way I can transition from being a strategy implementation guy to probably be able to come up with big strategy decisions, be able to come up with recommendations that could actually be taken forward by the different franchise
Right.
functions within the
Right.
organization. So that's a natural desire. That's a natural kind of facilitator to why I'm looking at boardroom conversations. The other element, if I may say so, is you're also looking at talent development. Largely, I've been part of high performing functions.
Hmm.
The place that I come from, typically, you're not looking at an army. You're looking at a very niche set of individuals with the right skill
True.
set to be able to
True.
launch new services for customers,
Right.
which required people like me to be able to train, to be able to kind of nurture talent and make sure they're able to go to the next level.
Right.
Can we bring the same mindset if I were to go into the boardroom and be able to facilitate key executives, key talent coming through and help the organization evolve? That's the other desire. That's the other reason for
Yeah.
me to consider something along these lines. The third element, which I don't want to lose sight upon, is in most of the markets, typically you're looking at commercial products, you're also looking at regulatory projects or services to be delivered, which require
Right.
you to engage with regulators a lot more. Uh,
Hmm.
Example, Do It Now. Do It Now is not just, or an UPI equivalent, if I just to remind, is not just a bank's product, it's an industry
Right.
product. When you're
Right.
launching a new industry change, you're actually engaging with the industry a lot more. So there is a lot more thought leadership happening. You are engaging with the industry, you are engaging with customers a lot more. So that ability to do thought leadership has been there with me for a while. Can I translate that by taking on a boardroom position? It becomes
Right.
a lot more meaningful for a boardroom individual to be able to engage externally as well. It's not just
Right.
confined to the four walls of a room. Are you able to take that value out and to be able to
Hmm.
create value for the organization as a whole? Is the other reason for me to think, hey, why not look at this as as an opportunity, as a way to take my career forward? And as I said, I've not had a how do I call it, a typical way of growing in as far as my career transition is concerned. It's been a little
Right.
different compared to others. I said,
Right.
why not retain that kind of a mindset and explore something different? Which is why I've connected with the Directors Institute to see whether it can materialize or not.
Great, great. And it's truly exciting, the vision that you have for yourself, Rajesh. And with your depth of expertise and industry leadership, stepping into more, boardroom roles seems like a natural step for you. So I'm sure you'll do wonders there.
Hopefully, fingers crossed on that. Because at the end of the day, from a franchise perspective, if I may say so, for launch of a new product, you're looking at being able to take a call on how much money needs to be put on the table, to be able to budget in terms of
Right.
resources, to be able to engage with so many stakeholders and make sure to get the outcome right within a very short
True.
span of time. So those reactions that you've had over a length of time, naturally
Mm-hmm.
speaking, one should be able to take it to the next level and be able
Right,
to
right.
create value for the organization, which is what probably kind of drove me to think this is the way forward.
Next step. That's great. That's great. So Rajesh, we've heard a lot about ESGs these days, and it's no longer just a compliance requirement. It is becoming a fundamental driver for financial decision making. And as someone who has led strategy and innovation in banking, how do you see ESG shaping the future of financial institutions? I know we talked a little about it in one of the previous questions, but if you can just, throw some light on your opinion about it.
Well, ESG historically, and by the way, I could be
guilty to what I'm basically trying to share here. ESG historically used to be about a compliance action. It used to be
Check
about
in the
providing
box.
reports,
Yes.
quantitative, qualitative assessments being reported in a
Right.
manner. The ESG team usually used to be a very small team in most organizations. It typically would end up reporting some of the projects initiatives that were done
True.
just to ensure the scorecard is in order. Um, Banks used to typically come up with one or two financial products like the green bond,
Right.
finance certain sustainable projects, and you're on the right side as far as the ESG scorecard is concerned. But
Right.
the ESG 2030 commitment that's typically there for financial institutions is significantly different from what history has been. Uh,
Right.
and I'm not going in a certain sequential order. It's as it comes to my mind.
Right. Right.
For length of time, how it's evolving now is we are not just looking at sustainable financing. We are also looking at generating sustainable deposits. Can I
Right.
generate dollar from the customer to be able to commit to the customer that the money is basically being spent only in sustainable projects?
True.
That's something of a commitment that most customers are asking, and it's not limited to
Right.
corporates; it's even the retail customers, as a matter of fact.
True. Mm-hmm.
uh, Sustainable quotient in terms of whether your customers are actually, and here it's a lot more specific to corporates, not necessarily to retail, whether your corporate customers are able to manage their ESG quotient. Are they making their business sustainable? That
Right.
translates into not a loss for them in future, but also not a loss for the bank as a whole,
For them.
or a
True.
financial institution as a whole.
Right.
That's the
Right.
other area where there is slowly focus coming. Third area where typically it's coming up as a key area of attention is you're launching new products and services. You're launching UPI 24 by 7. You've got to have systems running round the clock. You've got to make sure
Right.
you're eliminating paper and providing digital outcomes to customers.
Right. Right.
There is an environmental impact as a
Yes.
result
The
of this kind.
carbon footprint is increased. Right.
Correct. Now, how do you make sure that when you're launching new services, new technology, you are able to manage the ESG quotient for the bank? You are making
Right.
sure that this business is sustainable, this operating model is sustainable. That's the other
Mm-hmm.
area that focus is coming.
Right.
Remember, the kind of changes that we're bringing about as far as 24 by 7 banking is concerned, there is a lot of carbon footprint that we're creating. How do we make sure that
Right.
we're able to kind of negate that? The other area that typically comes through is the social part to it. I am a bank, I'm providing the basic set of services, but what's the social impact? That's the social value that I'm creating. That is
Right.
another area where there is a lot of attention coming to. I had the chance to
Mm-hmm.
work on a couple of projects. One was about educating what is banking to a unbanked segment, educating
Okay.
what is banking to students,
Mm-hmm.
building the mindset of starting to save early on, uh, bring banking and the fundamentals of banking to an individual very early on in life, coming up with tools that allow them to understand bank and the risks associated with banking in a much better way for consumers. So we had the
Right.
opportunity to work on those levels. That's picked up over the last
Mm-hmm.
3 years, if I may say so. The other area where banks are typically working upon is you looked at either donating money or you're looking at commercial financing. Is there a way to do
Mm-hmm.
social financing? Focusing
Right.
on certain segment. Uh, how do I call it? The underprivileged woman or single woman or the SME segment where financing has been a major problem, which is the reason why
Right.
they remain unbanked or they probably look at some of the fintechs or third-party service providers to be able to kind of enjoy the banking services. Can we
Right.
create value for those set of
Mm-hmm.
customers, so that kind of an audience for the right price? That's the
Right.
other area. So we had come up
Right.
with a partnership which was with government implementation entities to create an environment. And this is this very unique example that happened about a year or so back. Uh,
Mm-hmm.
we are launching this kind of a community kitchen, not the typical community
Okay.
kitchen, but we're basically working with some 40, 50 entrepreneurs who basically want to have the infrastructure made available, but don't necessarily have the financial wherewithal to basically enjoy it. You come up
Right.
with government institutions to create that kind of a model,
Mm-hmm.
self-sustainable, commercially viable because it creates value for them, also creates value to be able to run that without incremental finance coming from the banks. So there are
Right.
ways and means in which you can actually change the ESG quotient. We are
True.
also coming up with funds which are exposing even retail customers to invest in ESG products. Now, historically, it used to be only the corporate customers, the institutions. Now we are trying to make sure are there uh, financial instruments available that can allow a retail customer to also contribute to
Right.
the institution. So that's the way typically banks are evolving. Is it very structured? No, it's still unstructured.
It's good.
Largely also because of the fact that not every individual in the organization is well aware about what ESG is. It's
True.
probably
True.
a token reference in some document or probably some training program that they may have been aware.
Right.
But
Right.
beyond that, they are not necessarily educated. So that education program is happening, but right now it still remains a very unstructured way of getting the bank to participate. Is this
Right.
the end stage? No, it will evolve, but it's a lot better than what it used to be a year or two back. I myself might be able to kind of allude to it. When I was in cash management, I didn't necessarily associate myself with ESG, but
Really. True.
as my career evolved, it allowed me to open up to ESG, and I can realize why exactly it's been a problem for banks to change the mindset and change the
Right.
participation. So it's still an evolving stage, but it was a good exposure that I had a year or so developing the overall ESG strategy, and we call it VBI back in India, back
Okay.
in Malaysia as far as
Mm-hmm.
Islamic banking is concerned. So that's the area
Okay.
where we have typically kind of focused on.
Wow, wow. So yeah, it's clear that ESG is no longer just about meeting regulations. It's about creating long-term value and resilience. So Rajesh, we've talked about you joining Directors Institute. It is a valuable step for leaders who are looking to enhance their expertise in governance and strategy. We just like to touch base upon what inspired you to join and how has this experience helped shape your approach to decision making and leadership. Anything that you would like to say?
Why join Directors Institute? Good question. So, as I said before, product development typically forces you to change your mindset, approach everything with a certain sense of order, a certain sense of ownership. Now,
Right.
having an aspiration to probably move to a boardroom kind of a
Mhm.
career down the line, but you've got to prepare for it. Uh,
Right.
I, I've kind of realized that if you're making a transition, you also need to ensure you are upskilling yourself. You're making yourself relevant in that particular space.
Right.
We talk about networking being a very critical element.
Right.
Uh,
Right.
and thanks to your reminder that I've spent 20 years, 25 years in the banking industry, there is a need to refresh as well about stuff
True.
that you learned over a
True.
length of time.
Right.
Can't be done all by yourself. So you need a very professional approach to be able to go through that journey. And
True.
it's not something that can happen immediately. You need that kind of a professional guidance coming through, which is why
Right.
partnering with somebody like a director's institute could probably help me go through that learning curve a whole lot faster. What I've understood and I've seen to a certain length of as far as the networking bit is concerned, that's also one of the areas where director institute is relatively strong. Uh,
Right.
I'm having a chance to relive my career by having a conversation like this with all of you. The engagement that I look forward to as far as the industry stalwarts are concerned, locally,
Right.
internationally, whatever the case may be, that's something that I also cherish too. Getting a career into the boardroom is one part, but the kind of engagement that I may possibly get, the learning that I may get
Absolutely.
is invaluable. So that's something that I also want to kind of take along with me. Uh, what I've realized over the last month or so since I've been part of this program is that it's heading in the right direction. I'm getting
Mhm.
access to the right kind of information, knowledge, the right kind of individuals in the industry. Somebody I may not even have come across had I remained in the core banking setup itself,
Right.
with my career as it had been in the past. So
Right.
the access to people, the access to knowledge is something that's also kind of invaluable. So I'm definitely looking forward to this journey. If it materializes, awesome. I'm quite sure I do have the necessary skill set and experience
Right.
to be able to deliver. But again, it's somewhere down the line. But what I'm enjoying is the journey right now. The culmination we can look at it later. So
Wow.
definitely worth sharing with all of you.
Wow, that's really interesting, Rajesh. And it's also about identifying that you need to evolve yourself, you need to upskill yourself, and taking that step, which is such a great thing at at this career stage of career that you are right now. You're still taking those decisions about yourself, and I hope that Directors Institute and the curriculum is able to help you achieve the goals that you've set for yourself. So, really
Awesome.
looking forward to it.
Same here. Likewise. Thank you so much.
Great. Great. So, Rajesh, this conversation has been truly insightful from your experiences leading financial transformation across global markets to your perspective on governance, innovation, and risk management. It is clear that your impact on the industry has been profound. Thank you for sharing your journey, your expertise, and your vision for the future. It's been a pleasure having you on FaceTime with Leaders. And to our listeners, thank you for joining us on this episode brought to you by Directors Institute. If you found this conversation valuable, don't forget to follow us for more thought provoking discussions with industry experts. Until next time, keep leading with purpose, strategy, and impact. Thank you.
Thank you.